Right now, in the market, Hindenburg Research Report on Adani Group of Companies have created a havoc. So, in today's video, we'll try to analyze the effect of this report from a perspective of a common mutual fund investor. And in the later part of the video, we'll also see that what as an investor one should do. So, please watch the video till the end. Hello everyone, I am Dhawal and welcome to my channel DIY Finance. All of you may be aware of the Hindenburg's report on Adani Group of Companies, but still, I will try to explain this in a very short manner. Hindenburg Research is a US-based investment research firm with a focus on activist short selling. In September 2020, it had released a report on Nikola Corporation about the company being an intricate fraud built on dozens of lies. This led to the company's stock price falling more than 40%. Now, last week it has released a report on companies of Adani Group accusing of two major things. The first one, brazen stock manipulation, and second, accounting frauds. Here in the video, we'll not discuss about how far these allegations are true or not, nor we will discuss about what Adani Group will take action against Hindenburg, but concentrate on the effects this will have on a common investor like you and me, especially for the mutual fund investors, and also see how we should move further with our investment in this volatile period. So firstly, let's look at the listed companies of Adani Group on BSE and NSE. As evident, around 9 companies are listed on the Indian Stock Exchange, and yesterday, these companies were down by almost 5 to 20%, which in turn made the whole sentiment of the market negative, leading to the fall of around 1.5% in Nifty 50 and BSE Sensex. This downfall of 1.5% in the indices made a lot of panic in the mind of retail investors, as almost all the mutual funds in the portfolio were in red. So now let's check which fund houses are having what exposure to these 9 companies of Adani Group. As evident in the table, Parag Parikh and Invesco India Fund House are having exposure of only one stock of Adani Group, that is Ambuja Cement, with a total percentage of holding as low as 0.057% and 0.143% respectively. Whereas SBI Fund House has the maximum exposure to 7 of the Adani Group companies with percentage holding of 3.78. From the above data, it is quite evident that no fund house is having a overexposure in Adani Group stocks, which can lead to catastrophic effect on the fund house. Now let's also see in details about these 9 companies and which mutual fund schemes is having what percentage of stock in its scheme. Here I have not considered index funds and ETF, as they mimic the underlying index and would have the same weightage of stock as of index. Here also I have not mentioned mutual fund scheme having less than 3% exposure in the stocks. Firstly, let's see for ACC Limited. ACC Limited and Ambuja Cement, both the cement companies, were acquired by Adani Group in September 2022. As evident in the chart, SBI Magnum Comma Fund is having the highest exposure of 5.48%, whereas GM Large Cap Fund is having the least exposure of 3.07%. Now let's look for Adani Enterprise. Here also, 5 mutual fund schemes are having exposure, in which Taurus Large Cap Fund is having the highest exposure of 6.12%, whereas Taurus Flexi Cap Fund is having the lowest 4.34% of the total AUM. Now let's look for Adani Ports and SEZ. Here, a maximum number of funds are having exposure. Precisely, 44 schemes are having their exposure in these stocks, out of which PGIM India Equity Saving Fund is having a maximum exposure of 8.66%, and DSP Dynamic Asset Allocation Fund is having the least exposure of 3.02%. Now let's look for Ambuja Cement. Here also, 37 mutual fund schemes are having exposure in the stocks, out of which SBI Magnum Comma Fund is having the highest exposure of 8.82%, and Taurus Flexi Cap Fund is having the least exposure of 3.08%. Here, quite a few schemes of Corn Fund House are also having exposure in the stock. Now let's quickly look at the other stocks of Adani Group. No mutual fund schemes are having more than 3% exposure of the total AUM in the following companies of Adani Group: Adani Green Energy, Adani Power, Adani Total Gas, Adani Transmission, and Adani Wilmar. Till now, we have seen the exposure of mutual fund schemes in each of the Adani Group companies, but generally, we do not have all these schemes in our portfolio. So for an individual mutual fund investor, this exposure would be quite less in the overall portfolio. Generally, you can check what percentage of exposure you have in your portfolio from the detailed sector and stock analysis report of your software where you are managing your portfolio. I personally have been using value research for maintaining my mutual fund portfolio. Here in my mutual fund portfolio, exposure to Adani Group companies is merely 0.71%. Have you checked your exposure? Do share the values in the comment section. So now let's see the effect of this report in near future. First one, the market will remain volatile for few more days as every day new news will pour in, and also union budget is coming up in couple of days, and this can also fuel more volatility. Second one, the stocks of Adani Group may further crash from here or may recover depending on the counteraction by Adani Group. Third one, sectors like finance, especially the PSU banking sector, would remain quite volatile in the coming days. Fourth one, FII interest in the India market can decrease and they can look for other markets outside India. The fifth one, MSCI has also asked for a clarification and feedback from Adani Group for the ongoing controversy. And if they do not get a satisfactory reply, they can remove the 8 of the group companies listed with them. Presently, the cumulative valuation of Adani stocks in MSCI is around 3.5 billion US dollars, which can trigger a crash of overall market and also affect the sentiments of foreign institutional investors. Sixth one, the timing of this report coincides with the FPO of Adani Group, which can severely impact this FPO, and Adani Group have very few options to make this FPO a success. Now let's also understand the possible long-term effects. First one, Hindenburg has challenged Adani Group to file a lawsuit against them. If Adani Group goes for it, and if anything wrong is being proved against Adani Group, then the group companies would be in big trouble and its stock price would have a free fall and can collapse the whole market. Second one of the major concerns for the Adani Group is the debts they have. These debts are mostly loans of around 2.2 lakh crores, mostly from the PSU banks. And if anything is proved against the Adani Group, this can also trigger a windfall for these PSU banks. Third one, the market cap of Adani shares have skyrocketed in recent times, and some of the stocks which are not part of the indices can become the part of the indices in the coming future. With such crazy valuations, these stocks can make the whole indices quite volatile. So before concluding this video and suggesting what mutual fund investors should do, I would like to add that I have till now discussed only things in regard to a mutual fund investor and not for the people who have direct exposure to Adani Group shares. I will try to make a separate video on this topic. So now let's see what mutual fund investors should do. First one, as checked earlier, no fund house or mutual fund schemes are having overexposure in Adani Group shares, and especially if you see your own portfolio, then there would be even less overall exposure to Adani Group shares. So do not panic and take this as an opportunity for investment. Second one, do not go with a lump sum investment at one go, as there are chances that market would further correct from here, and also wait for the union budget. So go with a staggered investment strategy and spread your lump sum investment over a time period, depending on the sum to be invested. Third one, do not stop your SIP and continue with it, as this type of turmoils come time to time. And if you are investing for a long term, do not worry about it and stay invested. The above views are my personal views and your views may differ. Do share your views in the comment sections. If you find my video useful, do like this video and also subscribe to my channel for such interesting videos. To check my older videos, click the attached cards. Thank you.